Good day and welcome to SCO BRICS Insight. Today I want to focus on the Russian economy and how its growth is driving the West, particularly the US and the EU, crazy. Now, the major and influential organisations which have previously predicted the collapse of the Russian economy due to sanctions have once again revised their forecast. The World Bank now expects 2.2% growth by the end of the year, while the International Monetary Fund has revised its forecast to 3.2%. In Russia, domestic demand is recovering, industrial production is booming, and non-oil and gas revenues are growing. Well, I've mentioned all of this before in some of my other videos due to things like agriculture, fertilizers, etc. In Europe, the situation is markedly different, and the countries that initiated the sanctions have long been in recession, and their industries in decline. Now, in April, the World Bank upgraded Russia's GDP growth to 2.2%. This is stated in their updated economic forecast for developing countries in Europe and Central Asia. Back in January, the bank expected only 1.3% growth for the year. Furthermore, GDP percent growth was forecast at 1.1% for 2025 from 0.9%. And in 2024, inflation in Russia is forecast to be 6.9%. with a gradual decline to its target by 4% by 2026. Now, the International Monetary Fund presented a more positive assessment of Russia's immediate economic prospects. The IMF has revised its growth forecast for the Russian economy in 2024, increasing it from 2.6 to 3.2%. Now, the IMF predicts that this is due to lots of internal factors. Now, the fund's forecasts also indicate that inflation in Russia will increase to 6.9% in 2024, but be reduced to 4.5% in 2025. It also says that unemployment is expected to be at 3.1 and 3.2% respectively, which is, incredible for any industrial economy, and particularly not one that is subject to 19,000 sanctions. Now, the fund will submit its adjusted forecast to the Russian Ministry of Economic Development. Now, in light of the robust economic growth observed at the start of the year, the current estimate of GDP growth may continue to be revised upwards, and that's according to Lev Denisov, who's a director of the Russian Ministry's Department of Microeconomic Analysis and Forecasting. He says international organizations have recognized that, contrary to expectations, the Russian economy has shown remarkable resilience. So, von der Leyen's predictions of the Russian economy in tatters isn't yet another of that Harridan's rants that has proved to be particularly false. Now, one of the things that we have to look at is, firstly, industrial production in Russia, according to the report, has actively been growing through the past year. At the end of 2023, activity in the manufacturing sector reached record levels that were last seen in 2017. Furthermore, the growth of employment in the real sector was highest in almost a quarter of a century. A quarter of a century takes you back to the Yeltsin years, so it is a huge level of growth. According to data from Rosstat, which is the Russian statistics agency, the highest growth in production in 2023 was seen in industries related to the production of computers. They showed an increase of 32.8%. Finished metal products, except for machinery equipment, had an increase of 27.8%. Production of vehicles, aircraft, etc. increased by more than 25%. Now, Natalia Purieva, who's an analyst at Digital Broker, notes that business activity in Russia, in its industry, is supported by the high capacity utilization and stable positive dynamics in increasing retail sales volumes. Enterprise monitoring conducted by the Bank of Russia indicates that the level of production capacity utilization at the end of 2023 had reached its historical maximum of 81%. Additionally, any Western loans have been actively replaced by domestic financing, so the Russian economy and its banking system is able to do the financing. And the financing of the stability and financing of the banking system and sanctions has been a key factor in ensuring this positive trend. So the banks are in good shape, and there's not a lot of worries about foreign loans anymore. Now, the Russian economy has seen positive growth as a result of a certain level of high state expenditure and increased investment, particularly in the context of its import substitution program. Right? I mean, that has been to support all industries to replace what was foreign by stuff made in Russia. And despite the Western restrictions, the Russian economy has maintained access to major world markets, both as a buyer and a seller. I mean, parallel import instruments have been streamlined, and new trade corridors have been opened up with friendly countries. So there's very little here in Russia that you can't get that you used to get despite sanctions. Now, the Russian economy is growing confidently thanks to two key factors. That's the sharp increase in government spending and the successful switching of foreign trade in its pivot to Asia. According to the economist Konstantin Tazarov, the switch appears to be driven mainly by private businesses rather than governments, so not government intervention. And as the market nature of the Russian economy acts as the lifeline that prevents it from drowning in the face of economic shocks and all the other things. Now, the price caps and restrictions imposed by the US, EU and G7 on shipping companies and tankers are not having any major effect. In fact, they're not having the desired effect. The main export grade Urals crude is now priced much higher than it was last year and the year before, and it's about, if you work it out to around the COVID times, it's the same as it's done for the last 5 years. Anyway, according to the oil pricing agency Argus, Urals on an FOB basis, that's free on board, it's basically selling at about 75%, $75 per barrel. That's above the ceiling of 60%. And deliveries to India are already at $88, and that's just a 3.8% discount to the benchmark of Brent. North Sea oil, when did that last produce it in volumes? Now, when Russian ESPO, that's Eastern and Siberian Pacific Ocean oil, leaves the port, the price is $84, and it basically, when it's on the tanker, can go up even more. So this is a more expensive variety. It's never been anywhere near the cap for oil. Now, if you look at the increased transportation costs and the changes in the logistic routes, they've only had a minor impact on what Russia sells its oil prices for. I mean, even the IMF has stated in its latest report that Russian oil exports to China and India were well above the ceiling throughout the second half of 2023. So it's unsurprising that despite all the efforts of the West, Russia is earning more and more money from its exports. Now, along with oil prices, budget revenues are also rising. The federal budget in 2023 received 8.8 trillion rubles in oil and gas revenues, which is, if you work it out, about 88 billion in dollar terms, which is about 8.8 billion more than the amount that they were banking on. I mean, in the first quarter of 2024, oil and gas revenues, according to the Russian Ministry of Finance, amounted to 2.9 trillion rubles, which if you divide the ruble by 90, it works out at about 35-40 billion dollars. And that represents a year-on-year increase of 2.1 trillion rubles. I mean, in March 2023, the figure was 1.6. So it's a lot less. In March 2024, it was 1.3 billion, right? So we look at it, these all continue to pump money back into what's really going on. Now, a significant driver of the economy is the high domestic demand. And that's because of the higher wages. I mean, wages in Russia are actually growing and amid a shortage of personnel. And that's not because there's a shortage of people. It's a shortage of people to fill the skilled jobs and even the retail level. So, you know, so we're going to see a lot of things happening. According to Maxim Reshtnikov, who's the head of the Ministry of Economic Development, domestic demand will continue to drive Russia's GDP. I mean, the population's inflation expectation for the year are slightly decreased, because they notice that prices are not going up as much as they thought they might have been. So they're all still spending and not worried about it. Plus their wages are up. Anyway, the ministry also noted that the largest non-oil and gas revenues coming in are consistently positive. Now those are from things like agriculture, fertilizer, etc. Now, even the Financial Times observed in February, and that's not a real kind of friend of Russia or even friendly towards it. It said Western economists were surprised by the resilience of the Russian economy in the face of sanctions. It noted that the Russians had managed to avoid a recession by limiting its reliance on Western resources and increasing its defence spending. Well, defence spending to a limited extent, but you know, it's not all of it. However, it does note, in contrast, Europe has experienced a serious decline in GDP in most of the Eurozone, including Poland, Lithuania and Latvia, plus the so-called powerhouse economies of Germany and France, who found themselves in not a particularly good position. Now, judging by the forecasts of the international institutions, these instigators of anti-Russian sanctions are not going to come back soon, and the whole entire EU in 2024 will stagnate. Now, it does look like the EU's refusal to purchase energy resources from Russia has provoked record inflation in the EU. I mean, that's been going on, and although they say that inflation this month is only 3.2, you can tell that inflation has been well above 30-40% over the last 2 years, and that's hit the competitiveness of their local enterprises. Now, Russia's increased its interest rates, and basically that helped because it's not interfered with the growth, whereas in the EU, business activity in the industry and services sector of the Eurozone reached a record low recently, and that's from over the past 3 years. I mean, according to the forecasts of the IMF, etc., industrial production in Europe has continued to decline this year. Germany, Europe's largest economy, will grow by just 0.2%. 0.2%. And that was after last year's contraction. Now the UK GDP is expected to grow by 0.5%. 0.5%. And I grew up in the UK, so you know, I obviously cover and look at what's on in France. Again, growth is below 1%. Overall, the whole Eurozone economy is projected to expand by less than 1%. That's with the global economic growth projection to be 3.2%. So the Eurozone, who imposed all of these things on Russia, have basically shot themselves in the foot. Now, according to the IMF, it's not going to get any better in 2025 and 2026 for the Eurozone. So, anyway, in summary, it seems that the US, EU, G7 attempts to destroy Russia's economy have failed, and a large amount of credit for that goes to not only the Russian government, its central bank, and its policies, but its membership of the BRICS. Being part of BRICS and being good friends with India, China, and various other countries who are members of the BRICS and members of the Shanghai Cooperation have made sure that Russia is not friendless and is able to continue its economic growth. Now, thank you for watching. Do like and subscribe. Do visit our website for all the stories that this video is based on and lots of other interesting articles. Now, I look forward to making another video, and I'll see you all soon. Thank you.